Hello everyone. The euro is under the spotlight as the services drive growth but manufacturing drags, and the euro USD pair is testing key support levels. Let's walk you through the latest developments in the Eurozone economy, key technical levels for euro USD pair, and what it means for importers and exporters. October's PMI data highlights a divergent recovery in the euro area. The services sector continues to expand, providing growth support, while manufacturing shows signs of stagnation. In Germany, for example, the composite PMI rose to 53.8, driven by services, but the manufacturing slipped below 50, signaling contraction. This weakness in industry underlines the ongoing challenges for Europe's largest economy, including sluggish exports and muted investment. The ECB is likely to keep the interest rates unchanged in the upcoming meeting as inflation pressure remains moderate. Meanwhile, comments from Fed officials have reinforced the view that the December rate cut is unlikely. These comments push the probability of a Fed rate cut down from 93% a week ago to 69% currently, as per the CME Fed Watch tool. This downtick in the probability has fueled the gains in the dollar index and has put extra pressure on euro. German bond yields have softened and the euro USD pair faces limited near-term upside. Looking at technicals, the linear regression channel, the blue and red lines, are moving sideways, suggesting a phase of consolidation with no clear directional buys. However, the downward sloping price channel, the yellow and grey dotted lines, indicated continued bearish momentum characterized by a series of lower highs and lower lows. Recent daily lows, highlighted by the purple rays, are the short-term support levels between 1.1540 to 1.1520 levels. However, a decisive break below 1.1500 could trigger further downside and signal a renewed bearish trend. For importers, this is a critical zone. Consider hedging near 1.1500 levels and increase hedges gradually on a sustained break below the support. Exporters had multiple opportunities earlier, can stay put for now and wait for a significant uptick in the pair before taking new hedges. So to sum it up, the euro pair is likely to trade with a moderate downside bias for euro, reinforced by the ongoing dollar strength and weak manufacturing activity. Keep a close eye on support levels and central bank cues, as they will likely decide the next major move in the pair. Thanks for watching and stay tuned for more updates.